We're having a bit of technical issue. Give us 1 or 2 minutes, huh? Thank you.
I need to share with.
Waiting for you or they're starting already? They're starting already.
Wait, I got connected.
Harry, what was play the music? Let's see. Where's the video stop? You want us to play it?
Can already.
Okay. You can connect, huh?
Yeah.
You need us, huh?
Yeah.
Okay.
When did it start?
Good afternoon. My name is Perry Tan. I'm Head of Technical Training of the Singapore College of Insurance. On behalf of SCI, a warm welcome to all of you. Thank you for joining us this afternoon for this webinar on reinsurance contract certainty. Lillian, can I have the slides, please? Thank you. Okay, right. So today's webinar is on contract certainty in reinsurance, avoiding ambiguity and getting the deal right. Next slide, please. Okay, let me introduce the speakers for today. One of the speakers is Mr. Sin Siu Ho. He's Senior Compliance of Lloyd's Asia. You can see his profile here. He currently serves as a Senior Compliance Manager of Lloyd's Asia. right? And he's also currently the current chair of the Contract Certainty Advisory Group. Next slide. And joining him is Mr. Shiva Iyer. He is Executive Director of Aon Reinsurance Solution Asia Private Limited. Shiva is extremely familiar with contract certainty issue. He was the former leader of the Contract Certainty Working Group initiated by the MAS. Next slide. Well, this is just showing you the synopsis of this 1 hour complimentary webinar. We're going to cover a practical view of contract certainty in reinsurance. Okay, the importance of using clear contract wording, etc. Next. Okay, and here are some of the courses you may be interested in. Next slide. Okay, so we have a series of reinsurance courses coming up in July. You can see here, one of the new courses here is liability insurance and reinsurance. These are all in July, in person in Singapore. Next. Okay, and of course, we have technical reinsurance accounts and also a new one on life reinsurance fundamentals. These are all July dates. Okay, poll time. Let's play a couple of polls, Lillian, to engage the audience. All right, then, perhaps we will play the polls at a later stage. Let me now just hand it over. I believe our first speaker will be Shiva. Shiva, you'd like to address us? Yeah.
Yeah, sure. Siho, you want to share the slides?
Yeah, sure. All right. Can everyone see my screen?
Yeah, slideshow mode.
Yep.
All right. Thank you, Perry, and thank you, College of Insurance, for organizing this. I hope all of you are having a good day. Thank you so much for sparing your time to attend this webinar on a topic that is at the very heart of what we do in the insurance industry. Next slide, please. Reinsurance, as all of us know, is a risk and capital management tool for insurance companies. It helps insurers to maintain financial stability during unexpected events and ensures that policyholders' claims are honored even when the losses are huge and significant. By spreading risk, reinsurance strengthens the overall reliability of the insurance sector and contributes to the financial stability of the broader system itself. Given its critical role, achieving contract certainty in reinsurance is absolutely paramount. Contract certainty means that all parties to a reinsurance agreement, have a clear and unambiguous understanding of the terms, conditions from the moment the contract incepts. Without this clarity, disputes may arise over the coverage. Claims may be delayed or even disputed or denied. The absence of contract certainty exposes insurers and reinsurers to unnecessary risk, not just financial, but reputational as well, which can be even more damaging. Ensuring contract certainty protects the interests of everyone involved and allows us to operate confidently and efficiently. More than viewing it as a regulatory requirement, which it is in Singapore, we should realize that it is the backbone of good business practice in reinsurance. By prioritizing contract certainty, we enforce trust and reliability, and we safeguard the industry and the clients we serve. I will now hand you over to Siu Ho for continuing with the rest of the slides. Thank you.
Thanks, Shiva. So very good morning to everyone. Maybe it's a bit good morning for those who are joining us from the West. What is contract certainty? So this is a very interesting question. Something simple but a bit profound, like what Shiva has mentioned. But in essence, what I feel is contract certainty is actually nothing more than two persons trying to communicate, good communication, right? So, for example, if you're going to meet a friend to buy some apples, for example, which is the example which I'm going to share, you can be quite ambiguous. You might be telling your friends, "I want to buy some apple," but when are you buying it? What type of apples? Who is buying it, right? So, if there is no clear communications, there will be a lot of misunderstanding and unhappiness. I mean, for this example, apples. If you're not happy with the apple, you can just go to a supermarket to buy one. If the supermarket is still open, you can get it. If not, the next day, no big deal, right? But we're going to share with you in later. Sometimes these no big deals can become big deals. So in this context, right, we have got two friends wanting to buy apple. If you do not exactly state what you want, the other person would be confused, might be confused. So, for example, you've got one friend who wants to buy a red apple and the one is a green apple, right? People might get unhappy. So, this is all good communications to communicate clearly what you want to everybody. Let me check. So, Shiva, you're saying that it's showing presenter mode, is it?
Yes, that's correct. So full screen mode will be good.
Okay, let me try. Let me see how to. Maybe I should change the other one.
You can swap, you can swap the settings, view options, and you can.
Yeah, not so familiar with Zoom. View options. I think it's okay. No problem. Not bad. Okay. Right. Can you still see my screen?
We can. It's still in presenter
Okay.
mode, but
Okay, I'm not sure how to swap it. Never mind, it's okay. Don't worry about it. Small matter. Yeah. So this is the essence of contract certainty. So getting your thoughts across to the other party, clear communications. So like what Shiva said, for the context of our discussion is on reinsurance. So a bit of the just go through what is reinsurance and why it's important. So as everybody who was in this session will be very familiar. So this is things that are being bought and sold in the reinsurance contract, and the essence of it will be making claims or payments. So the reinsurance contracts are just the terms and conditions of the contracts in details. So this is the reinsurance, and the purpose of MAS, for the purpose of MAS, the focus will be on reinsurance contracts only. Although the insurance contracts is important, but for the context of Singapore's purpose, we are only focusing on reinsurance. So in terms of the reinsurance contracts, there are many types of forms of reinsurance contracts. So we are talking about the times where it goes back to beyond the computers. It could be on the pieces of paper, faxes, paper, and sometimes verbal communications, of course, and now it evolved to emails and PDF and even DocuSigns, right? So these are different forms of reinsurance contracts. And as you can appreciate, there could be different wordings and different materials presented to different people. And on slide 9, we'll explain to you why it creates problems when there are different forms of reinsurance contracts not unified in one place. The other important part, which I've also mentioned previously around buying apples, is the meeting of minds. So, if you do not know what you're buying, the other person doesn't know what you want, there could be a lot of confusion and unhappiness. So the most important part of contract certainty is to make sure that everything is written down and you have clarity. So we have some checklists for people to go through, and bearing in mind, checklist doesn't cover everything. So again, if sometimes when you're thinking about some scenarios where it's not covered in checklist, just go back to the first principle, back to the example of buying apples. Does your counterparty understand what you're trying to say? Do they know you're buying a red apple, or if they have misunderstood if you're buying a green apple? So the best way of it is, instead of putting down into verbal, is put down in words. Put in words, black and white, so that people are aware of what exactly you're looking for, and there's no changes. So when all these meetings of mine is agreed and put down in words, that's when we call contract certain. But if we have lack of contract certainty, so the next slide which we will be talking about will be very interesting. So I'm building on a bit of excitement about the consequence. So we have talked about what is contract certain, the Apple scenario, and then what happens if we have lacking contract certainty. So the results could be expensive disputes and potential financial ruins because of the uncertainty. And in terms of impact to society, the claims could be delayed. So this is next I'll share with you this very interesting unfortunate incident that happened, 911 incident, World Trade Center. I believe most of you would be familiar with this. And Shiva has a lot of experience with this scenario. So this, for those who are probably not born at the time, just a quick intro. There was this accident into this World Trade Center in the US. And there was some misunderstanding of policy wordings. Some wordings, and the amount ranges from 3.55 billion to 7 billion, depending on who you ask. And it costs a lot of money, legal fees, and took a long time to unravel. So maybe I'll just pass over to Shiva for his vast knowledge on this incident, unfortunate incident, to provide everybody the consequence of not being contract certain.
Thank you, Siho. Only a bit of knowledge. Can you just press those 3 dots on the bottom of your screen? Maybe you can switch the
3 dots
mode to, hide presenter view. Hide presenter view. Yeah.
Is it better?
And then if you can do a screen slideshow mode.
Resume. It's I think it's showing on the other monitor. I'm using dual monitor.
Okay, I think that's okay. I think we can go. Maybe you can minimize the left-hand side of the screen.
Okay.
Okay, so slide 9. We come back to slide 9.
Yeah.
Okay, so as the slide says, the reinsurance markets were truly sloppy as far as documentation discipline was concerned before 2000 and the years and decades and centuries before that, when reinsurance began being transacted. Remember, we are referring to times when we did not have the benefit of technology, electronic communications, or electronic documentation. Everything was manual. Deals were struck in coffee places, bars, golf courses, anywhere literally. And the way the records were kept were patchy and erratic. And well, I was in the industry at that time, so I know this. I've heard of cases where details of deals, hundreds of millions of dollars worth, were scribbled on pieces of paper, even scraps of tissues, they say, or anything that was available at hand. The industry relied very heavily on relationships. They still do, but times have changed. But those days, it was relationships, and that was everything. And long-term business relationships and business partnerships. Everyone knew everyone, and everyone thought any differences of opinion when claims happen could be easily resolved over cups of coffee or drinks or whatever. Until, of course, the tragic events of September 11, 2001 happened, as you have described. The industry discovered, unfortunately, that when claims climb beyond a certain amount, all relationships can fly out of the window. The industry was embroiled in years of expensive litigation. There were multiple insurers to this insurance contract because of the sheer size of the sum insured. Each insurer had bought treaty or facultative reinsurances to which this risk was ceded. And some reinsurers had retrocession as well, which were hit by this claim. So there were several court cases, not just one, between the various parties, all trying to avoid paying the claim and all trying to take a view as to whether it was one event or two events, because the wordings did not specify, or they were not clear, or they were capable of different interpretations. And all of this gave the industry a very bad name and tarnished its reputation. See what the slides are gone. I cannot see the slides. Can you move to slide 10? Yeah.
I can't see the slides. Okay, can you see my slides?
Not yet.
Okay.
You have to share screen, huh? Yeah.
Oops.
You have to click share screen.
Is it better?
Yes, it's coming up now.
Okay. All right.
You can go to yes. The UK regulators, because London was the center of insurance and reinsurance world, which even today it is, were very frustrated, and they swung into action, forcing the industry to clean up its act. So if you can go back to slide 10, Siho. The UK regulators gave the industry 2 years. By December 2024, they told the industry that you must clean up your act and end this deal now, detail later culture, which it was very true. It's apt description. And told them and gave them 2 years to set up a market reform group of the industry professionals, which the industry did and worked very hard. And by the end of 2006, 2 years later, they had significantly improved the standards, and insurance and reinsurance contracts were both subject to this contract certainty initiative and this contract certainty mandate by the regulator, and the industry really achieved great progress. And as you can see, 88% of the contracts were termed as contract certain, meaning they had fulfilled all those requirements that was set down by the market reform group for a contract to achieve contract certainty status. Next slide, please. And UK market became the example for the world to follow. High standards were set, and obviously these good practices brought a lot of benefits to the industry. We must remember that UK contract certainty initiatives apply to both direct and reinsurance policies, but then Singapore followed many years later. Next slide, please, Yuho. Thank you. The MAS brought about contract certainty initiatives in Singapore, but they did not do it until 2011, and they only focused on the reinsurance contracts. The reason being that reason number one, Singapore was a small market as far as direct insurance is concerned, and MAS believed that we already have robust practices which introduces sufficient contract certainty, because by then electronic technology and electronic solutions were already in place. But reinsurance, Singapore was growing and becoming more important as a regional reinsurance center, and the government of Singapore was very keen to preserve and grow that position in the years to come. So that's one of the main reasons why the MAS focused on reinsurance contract to be contract certain. They slightly differed in their approach from the UK market. They persuaded the industry associations, the GIA, the LIA, the ARBAs, and the SRA to then contribute their volunteers to form this contract certainty working group. And now that body has been renamed to Contract Certainty Advisory. And this group does borrow a lot of good practices from what the UK market laid down in between 2004 and 2006. And also MAS has been requiring all the market participants, insurers, reinsurers, and brokers who work with reinsurance to enter their contract certainty achievement details of all the contracts that incepts in their books every month into the portal, which is maintained by Singapore College of Insurance on behalf of MAS. And the companies are still doing so today. We started from 2013 July. It's been almost 13 years, and the companies are still reporting. And Suho, I'll hand you over to you to continue.
Hey, thanks, Shiva. So yeah, thanks, Shiva. And I think for the benefit of everybody, I think the key message I've heard was that prior to those times, contracts were done on bits of paper. I believe, Shiva, you mentioned it was done even on maybe some piece of paper receipts, and then just handed over to the counterparty.
Not all, but some of them, yes.
Yeah, some of them. So I think the good outcome around all of this is that it formalized what is expectations for everybody, right? So you can't go to a coffee house, receipt, write down some piece of paper, and then to expect the contract to be fulfilled, right? So I think that was those wow years, and the outcome of that is people has become more disciplined in terms of how to write contracts, right, Shiva? So that is
Exactly.
I think this is something, and I think the positive side is that the errors and omissions has gone down in terms of the policy, the exposures. I think it's brought about very positive change to the industry. So, and this is the reason why we are trying to push for it, just to ensure everybody is familiar with this concept and to continue the good work that the industry has achieved. So in terms of how the contract certainty is achieved, like what Shiva said, it's applicable to all MAS regulated insurers, reinsurers, brokers for reinsurance contracts. The submission requirements is for reinsurance contracts. It does not cover insurance. But for good practice, do encourage or do implement everything that you've done for the good work that you've done for reinsurance into your insurance contracts as well. So in terms of the definition, so again, just to re-emphasize, for those who find this topic a bit wordy, again, it's back to the topic of green apples, red apples. I think that's one of my favorite examples, right? So just to think about it, what is the definition? It's just to make sure that both parties are agreeable, know what they are getting into. So that this means that the terms and sign lines are agreed by the time they enter into the contract. I think this is the most fundamental. Of course, then you will say that, okay, we have talked about the how, then how about the when? When is it effective? So that's the part where we have this additional 30 days that you need to submit the documentations, the signed documentations to all parties, so that there's avoidance of a doubt. So we have 30 days of either the letter of the reinsurance risk inception or reinsured's order to buy, whichever is later. So a very interesting question to Shiva. What's the difference between the reinsurance risk inception or the reinsured's order to buy? Why is there difference, and why is there a need to be the later of either of these two?
Well, it is when the reinsured, the insurance company, when they determine and finalize which reinsurer to give what share, only then they give an order to bind, and only then the reinsurance contract truly incepts. Although the risk itself may have incepted earlier, but whether the reinsurer should be on risk from inception or from the date they get the reinsurer's order to bind depends on the reinsurer. But the 30-day provision given by MAS is that only when the reinsured's order to bind is received by the reinsurer, only then the reinsurer knows that there is a reinsurance contract. And then the MAS gives 30 days since that date to complete the documentation. So I think that's fair and not make it backdated to the inception date.
Thank you, Shiva. This is very clear. So we have 30 days for all parties to send out the documents and to receive the documents. And only when it's done, then we can say that the contract is certain. So we've talked about these two concepts. So again, just a little bit of elaboration. And for those who have been doing contract certainty reporting, you'll be familiar with the Leg 1 and Leg 2. So Leg 1, again, is talking about the first point, where the reinsured, and where all the parties must ensure that the terms are clear and unambiguous by the time the offer is made to enter into a contract. So this means that whatever things that you want to say, for example, using the apple analogy, must be clearly documented. Whether you want a red apple, whether you want a green apple, when you want the apple, where you want to buy the apple from, what price are you willing to pay for the apple. This has to be clearly documented and filed. It must be maintained by the reinsurer and broker where applicable. So this is the part where they're talking about all these documentations are clear, are captured. Sometimes there could be more than one reinsurer, and then there's some issues of overplacing of the risk. So this compromises contract certainty and must be avoided. After entering into the contract, all the participation must be provided to each reinsurer promptly. So everybody knows who are the reinsurer. So on Leg 2, we're talking about the 30 days. The expectation is that the reinsurer would stamp and sign the slip or other forms of reinsurance and send to the reinsured or the broker. The role of the broker would then to produce a cover note or evidence of cover and send to the reinsured. And the responsibility of the reinsured would be to sign it and send it back to the reinsurer or the broker, if it's done through a broker, within 30 days. So each party have 30 days to ensure that this is done. We have also received queries from the market previously where the reinsured is not based in Singapore and they are not subjected to MAS regulations. Then the brokers and the reinsurers are very anxious, because a lot of times the reinsured is not responding to the request. So our advice to the brokers and the reinsurers is to use the best endeavors to get the reinsured to sign. And this is only for reinsureds that's not based in Singapore. If you are still unable to get them to sign, despite a couple of chases, then you can deem the contract as contract certain. However, if the reinsured is based in Singapore, you can only deem the contract as contract certain if they receive the signature on the documents. So again, if the reinsured is not in Singapore, try your best, a couple of reminders. If you still do not get response from them despite chases, you can deem the contract as certain. If the reinsured is based in Singapore, you need to get the signature on the document. So this is the difference between whether the reinsured is in Singapore or not in Singapore. We have also received queries from the market with regards to electronic signatures. Electronic signatures is acceptable, subject to them being acceptable in the jurisdictions that's applicable to the reinsurance contract. If you are using a broker, the reinsurer is considered fulfilling leg 2 if you have sent the documentations to the broker, as the broker is legally recognized as the entity for the communication flow. So in short, we have got this example again to illustrate how contract certainty is achieved with the reinsurer, broker, and the reinsured. For the reinsurer, the person on the left side, the flow of information is to provide the slip to the broker. He is considered to have achieved contract certainty if all the terms are agreed and he receives the reinsured signed copy within 30 days. And I've put the asterisk to say that no, this is based on reinsured based in Singapore. Back to my previous slides, if the reinsured is based outside of Singapore, then try your best endeavors to get the reinsured to reply. For the broker, it will be to send it to the reinsured and to get a signed copy within 30 days. And for the reinsured, the responsibility is to sign it and return to the reinsurer or broker within 30 days. So ideally, if this is all done, then we have a very happy family where we have a contract certain reinsurer, contract certainty broker, and contract certainty reinsured. However, the point to note for us is that unless the document is considered contract certain, even if your documentation is delivered in time within 30 days, it is still not contract certain. Because I think the essence of it is that the documentation itself, it needs to be contract certain in terms of the terms and agreements. Everything needs to be agreed. So if you are sending a document that is not agreeable to all parties, then even though you have tried your best to achieve leg 2, unfortunately, it has not achieved the contract certainty expectations and requirements. Well, you may say sometimes it's too urgent and there's some issues you're not able to meet the principles. Then for the purpose of ensuring good practices, all parties should try to resolve the exceptions, the issues as soon as possible and make it contract certain. So what we are trying, again, back to the example of the red apple, green apple, I think what we are trying to say is that do not view this as the tick the box exercise for the purpose of compliance, but really to look at it in terms of risk management. What if you do not have it? What if you do not do it correctly? Would your counterparty be unhappy or lead to complaints or fines or even lawsuits against your firm? So what we're trying to say is we're helping you to ensure that issues are resolved before they explode. The achievement of contract certainty is done by making sure that all parties fulfill the contract certainty requirements. One point to note is that your company may have your own contract certainty requirements. It may be called different names for different companies or in different jurisdictions. Feel free to use those documentations. We do have a we do have a checklist that everybody could use if they want to. But it's just a suggestion. So if you have a more stringent requirements or more robust documentation that you are familiar with or you prefer to use, feel free to use them. If not, we have a template that everybody could use. We also encourage people to to have audits on the contract certainty samples to make sure that they are in line with expectations and there's adequate system processes in place to monitor, to evidence contract certainty for your policies. Along the lifespan of your contract, things could change. If there are material changes to the contracts, then you need to make sure that it's recorded and fulfill leg 1, leg 2. So again, for example, back to the apple analogy, if all of a sudden both parties decided that they do not want red apple or green apple, but instead they want yellow apples, for example, then this is something that is materially different from the contracts. And then you need to put it into your endorsement, ensure leg 1 is fulfilled, and then communicated to all parties within 30 days if the expectations of the apple has changed. Next, we're going to talk about a bit about subjectivities. Subjectivities are issues that requires certain conditions, and the reinsureds must meet them to ensure that they obtain coverage. So maybe I'll just ask Shiva a bit about subjectivities, what he has seen, and what are the common issues or interesting anecdotes about these subjectivities that he can share.
Oh, thank you, Siho. Yeah, well, subjectivities are those which are imposed by the reinsurers. So, for example, in the interest of time, maybe I'll just say one subjectivity, which many times we say no further deterioration in loss record prior to inception. So let's assume it's a treaty contract and we are in December, on December 15th, we have done all the process for completing placement. And then there's a subjectivity which says no further deterioration in loss record. Now, that's something that is really not possible to fulfill, because what if there is one tiny claim which makes the loss ratio 0.1% higher than when it was presented to the reinsurer? What is the reinsurer going to do? Are they going to come off cover when a claim happens 6 months after the contract incepts? So those kind of subjectivities, that's what we are talking about. So those are the kind of challenges. And therefore, any subjectivity, unless it is fully claused and accompanied by the implication and the consequences of non-fulfillment. First of all, the subjectivity itself should be reasonable and it should be clear, and then the fully claused subjectivity will be where the consequences of not meeting the subjectivity are also clearly mentioned in words.
Thanks, Shiva. So these are some issues with incomplete subjectivities, subject to no known reported losses. So these are not so ideal. I think this next slide shows a better fully claused subjectivity. So like what Shiva has mentioned, all these subjectivities have properly claused conditions so that everybody, the reinsurer and the reinsured, they are fully aware of the responsibilities. So this is a good example of a fully claused subjectivity. So in the essence of time, we'll again skip a couple of slides. Non-binding indications, I believe everybody is quite familiar. So if you have received a quote or receive a risk that is not contract certain, you can just put a non-binding indication. You have to put a non-binding indication so that everybody knows that this is a not contract certain risk. Only when all the term subjectivities agreements are contract certain, then you become a quote. I think these are general best practices, right, Coach Shiva?
Yes, no, absolutely true. Reinsurers, if they are not satisfied with the presentation that they have received, then in order to save time, they will give an indication with codes, of course, but they will clearly say that this is a non-binding indication, meaning that unless the full information is provided or the subjectivities or whatever they require are given to them, then whatever they have quoted, we cannot sign them for the percentage that they have offered to take up. We cannot sign them and bind them to the contract.
Yeah. Shiba, I think this is also a very good practice, risk management, to provide very clearly if it's a non-binding indication, right? So that
Absolutely.
if,
Yeah.
if anything happens, I think it's very clear that it's non-binding.
Sure.
Until we have resolved all the subjectivities, like what we have mentioned previously, terms are agreed, then you can remove these non-binding indications and then becomes a quote, and then we send it out. Yep. So for the interest of time, we'll just very quickly go through this topic on terms of how reinsurance work. I think everybody's familiar. We've got this example of a factory owner going to the broker to the insured. The insurer will go to the reinsurance broker, and then you place with a reinsurer for the risk. So this is usually how it works. In terms of contract certainty application to the reinsurance process, again, we are talking about reinsurance only, but insurance is just an important part of this whole negotiation. But for the purpose of contract certainty reporting, we're talking about the reinsurance process only. So we've got the negotiation stage at the broker and between the reinsurer and the reinsured. And between the reinsurer, broker, and the reinsured, there's expectations for them to ensure that all negotiations are clearly documented, all the terms are clear and unambiguous. And the reinsurer, brokers, and the reinsureds receive the agreements within 30 days. So the benefits of contract certainty for reinsurance. So again, there's benefits for making sure contracts are certain for insurance, but because of this topic, we're talking about reinsurance, contract certainty for reinsurance. The benefit is that when the claims comes in, both reinsured and the reinsurer, they are clear on the conditions, on the claims conditions. And because of the clarity, hopefully, the claims are paid promptly and resulting in both parties being happy with the outcome. And I think the important point is that we are in the business of claims. So claims to happen, and I think as long as the wordings, the agreements is clear, everybody will be very happy to make the claims payments. And this is good for the industry as well as for the society to ensure claims are paid promptly. So we have a couple of tools and resources that's available to the market on our website. We have got a FAQ, we have got a checklist, we've got a sample slips and examples of fully clause subjectivities. So all these are freely available at our contract certainty website. we have provided a checklist for everybody to use, but like what I've mentioned previously, feel free to use your own checklist if your company has one. So the checklist that we have provided is really quite useful to ensure enhanced operational efficiency so that everybody is familiar with it. So if you're in Singapore, the reinsured, the reinsurer, the brokers, they're familiar with this same checklist. Everybody is clear on the expectations, and that the checklist is helpful for staff to learn all the expectations or requirements. If you have not seen a checklist, I do encourage everybody to download a copy. So the checklist would provide attributes on the risk, security, premiums, admin, and conditions. So again, fulfilling all the requirements of the checklist is one, but really, have you fulfilled the spirit of contract certainty to ensure that the counterparty is aware and all the terms, subjectivities are agreed and clear? That is the most important. So this is some examples of a facultative slip. I'll just go through one example. We've got two, but in excess of time, we'll just go through one example. In this example, the reinsurer and broker have ensured all terms are clear and ambiguous. The risk inception is on 1st January 21st. The offer acceptance are completed, and they have received, the reinsurer have received the reinsured order to bind on 27th December. The contract was signed on 29th of January. So because for Leg 1, we're talking about whether the terms are clear. So they have both the reinsurer and broker have ensured that all terms are clear. So they've fulfilled Leg 1. And in terms of making sure that they have sent it over and received within 30 days, by 29th of January, they have achieved Leg 2, which is within 30 days of the inception of the risk, which is 1st January. So this is good. So I'll just skip through scenario 2. So very similar. So the last part which we want to talk about before we go to the Q&A is talking about how to report contract certainty numbers. So on the website, when you log in, there will be a user ID and password. You click in and then you choose whether if you're reporting as a reinsured or reinsurer or even as a broker. And then it's a very simple submission, just the numbers for in terms of the Leg 1 and Leg 2. Leg 1 is the one on the left side, Leg 2 is on the one on the right side. So how many treaties are contract certain? Yes and no. Treaty and facultative. So for those who have not received the password or access, do let us know. We help you to set up an account. So there will be only one user for one each entity. So in terms of reporting, so just some very important note. So one slip with 10 reinsurers on one contract is considered one. However, if you have 10 reinsurers on 10 slips, will be considered 10. So similarly, one slip with 4 layers will be considered one for contract certainty, but 4 slips, each representing one of the layers, will be 4 contracts for contract certainty reporting purpose. So this is the final slide of our presentation. We would be sharing these slides out to everyone after this presentation. So that's so you can refer to this. So I think that the key point is, I think I'd like to summarize is, for those who are still a bit felt it's too wordy or still couldn't catch what we are trying to say, I think what I want to try to let everybody get off this training is, in terms of the apples example, just to make sure that everybody is, the reinsurer, broker, and the reinsured, they know what they're buying. Are they buying a red apple and a green apple scenario? And then to make sure that it's written down and send it to everybody. So if the reinsurer is not based in Singapore, try your best effort to reach them. For the reinsured that's based in Singapore, you need to get their signed documentations. So that's all for the presentation.
Okay, thank you so much, Siu Ho. As we started a bit late, I'm going to allow a little bit more time for Q&A. Shiva, may I trouble you to firstly, I notice you have answered 7 of the questions. Could you just briefly run through those 7 answered ones just very quickly? And then we'll try to clear as many of the open ones as possible. Now, if by 4:15 we are unable to clear everything, rest assured we will copy all the questions and forward to both of you, and we will transmit the answers to all the attendees. Okay, thank you. Shiva, you can start now. Thank you.
Okay, thank you so much, Perry. Just a question. I have these answers that I have typed on my screen. Are the participants able to see or they are not?
Yes, if they go to the Q&A box, if everybody goes to the Q&A
Okay.
box, they should
Okay.
be able to see one tab for open, one tab for answered. So I suggest you can start from the answered tab first. Yeah.
Okay, I'll do that. Okay, let me do this as quickly as possible so that as many questions can be answered as possible. So the first question is it necessary for compliance department to conduct a second pair of eye check on all contract certainty checklist? My answer is not really necessary. How an entity wants to set up their own internal risk control practices is for them to decide. So Siu Ho, I'll just run through. Siu Ho, please jump in whenever you want, okay?
All right, sure.
Okay. And the second question is, as we are mostly doing reinsurance, we may not receive documents within 30 days. What happens if the documents are not received in 30 days? So we need to report those contracts as not certain. That means the second leg is not fulfilled. But we still need to try and get the documents as soon as possible, because at the end of the day, it's business as usual, whether we get it on 30 days, before 30 days, or 35th day, or 40th day, we need to continue doing that. But as far as the contract certainty requirements are concerned, please report them as not certain for leg 2. What if the wording is...
Shiva, I think I just add in again. I think it's the spirit of contract certainty, so
Yes.
not the checklist, checkbox. So I know everybody is very compliant and so they want to make sure that they're doing the right thing, but sometimes it's just not possible. So I think in those circumstances, what's more important is to make sure that everybody is familiar, or your counterparties, your reinsured brokers, reinsurers, everybody's have got the documentations, even though it's past 30 days. But the spirit of this reinsurance, this contract certainty, is make sure that there's no disputes, or try to minimize the disputes or these issues after contract is done.
Yeah, exactly. Agree. The next question is, what if the wording in the sign file contradicts with the wording in the email, which is agreed? Well, that's a really bad practice on the part of the company. Well, if a company changes the wording when they sign without informing the other party that I have changed, then that's a different issue. You need to take it up at a different level. But my short answer is, for legal purposes, the sign wording will prevail.
Yeah, correct.
Would that agree?
So that is the reason why it's important to have the signed copy within 30 days. So even though you may not meet the 30 days deadline, but as long as you have a signed copy, I think it protects everybody.
Yeah, that's as far as contract certainty, for the purpose of contract certainty, is concerned. But if the wordings are different, then the signed copy will prevail. But that should not happen in normal practice. The next one is, the guidance states that leg 1 to be achieved, all terms and subjectivities must be clearly expressed, binding. But in the MAS portal, it seems terms must be unambiguous, binding, or inception. That's correct. So it's binding or inception if the binding is done before inception. But before inception, if we can clear the subjectivities, then that's fine. Because again, as Siu Ho said, the spirit of contract certainty is that when claims happen, there shouldn't be disputes, because claims is the foundation of our industry. I mean, whether anybody agrees or not, without claims, our industry does not exist. So as long as before inception, all the subjectivities are met, we can report leg 1 as certain. Next one, if the market is overseas, and we showed that we have changed a couple of times. Yes, that's correct. Even if the overseas reinsured. Oh, I'm sorry. I think I may have misunderstood this question. If the reinsurer is overseas, they have to sign the slip before we can consider the contract as contract certain. But if the cedent is overseas, then we have to use our best endeavors, but we don't have to get them to sign the slip. I hope that's correct. The word market confused me a little bit. But if the reinsurer is overseas, because the whole purpose of contract certainty is that the risk carrier must have signed. So the reinsurers have to sign, otherwise it's not contract certain. If the treaty contract 10 different reinsurers, well, we need to manage them because contract certainty is a risk management tool, and as a good business practice to minimize the disputes when claims happen, if whatever number of reinsurers are there, all their subjectivities have got to be managed.
Yeah.
Okay. The overseas reinsurer may take a long time to finalize the slip. As long as the Singapore-based broker is intermediating the contract, then yes, the contract certainty requirements will apply to that broker. It won't apply to the reinsurer or the ceding company, but the whole purpose, again, of MAS is to make Singapore a high standard, high quality reinsurance hub. And any broker operating in the Singapore market should follow those high standards. So that's basically what it is. Then there are those questions, still 16 open. All the sign lines must be executed on or before inception or binding to achieve leg one. Yes, the answer is correct. It's correct. The answer is yes. Yeah. Agrees, Yuho?
Yeah.
For the reinsurance broker, what does cover note usually consist of? Okay, for a reinsurance broker, the cover note will usually consist of a covering letter and the list of reinsurers with the signed shares that they are taking on the particular contract and the signed slip of each reinsurer. That's what the broker, as a package, sends to the reinsured to tell the reinsured that, as per your instructions, we, your agent, we have placed this contract with all of these reinsurers, each one taking so much share. And the signature of the reinsurers on the slip should be attached, and the entire slip also should be attached. You don't have to attach the slip 10 times if there are 10 reinsurers. Just attach one copy of the slip and just attach the 10 signing pages of the reinsurers. Okay. Appreciate if you could elaborate which date are we referring to as a date of binding cover. Siho, correct me if I'm wrong. It is the date on which the reinsured is the party transferring the risk. The reinsured agrees that, yes, I accept these reinsurers with so-and-so shares as the reinsurers, and that's when they bind. Jana, you would like to answer this question, is it? I see a remark there. There is I'm not sure if I'm missing a company. I'm missing a question. It says, how strict should we be on FX clause in the slip, claims handling clause in the slip? Well, depending on whether it's facultative or treaty, these are clauses that are usually found on treaty slips, and I assume on facultative slips as well. And depending on the contents of the contract, for example, if the contract has some insureds in one currency, premiums being paid in another currency, claims could be settled in a third currency, then the FX clause is important. So it all depends upon the kind of risk, the type of contract, what does it cover, what currency is the risk in, and what currency are the transactions done. Then FX clause becomes important. And the term FX clause is a very general term. It depends upon what we want to achieve. Claims handling clause as well. Yes, it is a necessary part of every reinsurance contract. But again, the understanding between the ceding company and the reinsurers as to how much control the reinsurers want to have on the claim, do they want to have any control, will the ceding company have full control, The claims handling clause the wording will depend upon the understanding between the two parties. But yes, the clause is necessary in a reinsurance contract. Subject to survey report policy being provided. Well, I do agree that if the subjectivity is simply that a survey report should be provided, then it is not a severe subjectivity. We don't need to penalize the policy. But again, for good practice, a reinsurer to impose this subjectivity, they should follow that with words which says what will happen if it is not. Otherwise, there is grayness introduced. Agree, Siho?
Yes, correct. I think that it's again back to this the spirit of the contract certainty.
Correct. It's not a very severe subjectivity if it is simply those words, but then again, it is for the reinsurer to maybe complete it so all parties are happy and no scope for disputes. Is it true that for treaty placements there will be no subjectivities? Calculation of loss adjusted expenses and expert fee collections. For treaty placements, on a proportional treaty, calculation of loss adjusted expenses will not come into the question because a risk is being shared for a certain percentage, premium is being shared. So all loss expenses incurred by the ceding company will be paid by the reinsurer. For non-proportional treaties, it is similar, but losses above a certain amount will be paid. So it is not that there is no need of subjectivity, but in 99% of the treaty contracts, there will be no subjectivities on loss adjusted expenses and expert fee collections. However, some treaty contracts will have claims control or claims cooperation clause imposed by the reinsurer because the reinsurer may not be 100% confident of the ceding company's capability to handle claims, complex claims, or very mega large claims. If that is so, then the reinsurer has the right to put those words in a claims cooperation clause where the loss adjusted expenses can come in as what does the reinsurer wants to control. But again, to your question, if the leading reinsurer does not put in any condition on loss adjusted expenses, then, well, the ceding company can incur what they want to incur and claim from the reinsurers. But in general, yes, I agree that it will not be applicable. But again, it depends on the leading reinsurer. How do we deal with the subjectivity of no deterioration of loss record? We have to tell the reinsurer. If you're a broker, we have to tell the reinsurer, take it off. It doesn't mean anything. Put some conditions like no deterioration of loss record beyond 15% from what is presented today, or 20%, or something like that. Or in a treaty, for example, if the previous year has a catastrophe claim, then the reinsurer must put a subjectivity. The previous year's catastrophe claim shall not exceed so much amount as the ultimate net loss for the whole treaty. If it does exceed, then I will charge additional premium. So those kind of subjectivities are acceptable because it is clear, but simply saying no deterioration of loss record is not a good subjectivity. We have to get the reinsurer to change it or remove it. Must we clearly state the basis of exchange rate in slip? I'm sorry, I'm missing that. I think the thing is, must we clearly, the contract is following the original policy wording, follow the exchange rate. Depending on whether it's a treaty or a facultative, it can be quite complex. Maybe, you can always reach out to us separately offline, but the basis of exchange rate is, if it is a treaty, it's always desirable to have the basis of exchange rate. Are we talking about premiums and claims conversion? Are we talking about deductibles and limits conversion in a non-proportional treaty? Depends upon what kind of treaty it is. But as long as it is a treaty where the ceding company is in one country, original policies are in one currency, reinsurers are in a different country, so the premium settlement will be in a different currency, it is always good to have the basis of exchange rate. Even if it is not, because in treaty, you cover thousands of policies and claims could happen in a different currency because if it's a marine treaty, for example, the ship may sail overseas and get docked in some other country and incur charges for repairs. So all those kinds of scenarios make it important that in a treaty, definitely basis of exchange rate must be mentioned. In a facultative, if it is a pure facultative arrangement, local policy, local reinsurer, local currency transactions, then you may or may not need to have it. So again, depends upon the risk being covered. For documentation retention, how many years should the reinsurance brokers keep their slips? I think this depends upon the local local law requirements, and also it depends upon whether there are claims. If claims happen and the claim is outstanding and in litigation for the next 15 years, regardless of what the local law requires, you have to keep the records. So again, it depends. The answer to many of these questions are it depends, and it depends on a set of factors which we have to look at. So yeah, documentation retention. If there are no claims and the contract is closed, then the local regulation follow the local regulation as to record keeping. Otherwise, if there may be a non-disclosure agreement or a terms of business agreement entered into between the two parties, then that agreement will drive the record retention. Or if there are claims, then definitely the closure of the claim will drive the record retention. Can you share the average contract certainty compliance statistics? Oh yeah, sure. It's about 85% across all parties together. Siho, correct me if I'm wrong.
That's right.
The highest, I think, for percentage is achieved by the seeding companies in Singapore, because seeding companies in Singapore are required by MAS to maintain good practices. Next comes the reinsurers, and I think the last of all will be the brokers. And this is not to degrade the brokers. I'm part of a broking industry. It's because for brokers, because there are there could be 10 reinsurers on a slip, and one may not sign and return the slip, then the broker has to consider that as not contract certain. So that kind of situations drive the broker statistics down. But overall, it's about 85% contract certain. Any consequences of missing a 30-day period? No direct consequences, but if the contract certainty returns from your company in the portal shows consistently low percentage, MAS might give a call and ask questions. But the 30-day period, the leg 2 is less significant than leg 1. Leg 1 is more important.
Yes, correct.
Yeah. What if we received all? Sorry.
Because I ultimately we want to ensure that the contracts are certain. So I think that definitely we do not want to be in a situation where people try to hurry to meet the 30 days and fail leg one, right? So
Yes.
if you miss leg one because you are trying to do a very good job on if leg one, if you miss 30 days because you're trying to do a good job on leg one, then I think it's better than doing a terrible job on leg one and missing and meeting the 30 days period.
Absolutely agree. So if the reinsured slip past 30 days, if the reinsured is in Singapore, then yes, it's not contract certain. But if the reinsured is overseas, then as long as you receive the reinsurer's slip within 30 days, it can be counted as contract certain. What if not only beyond 30 days, it was only received more than 2 months? Are you referring to the submission of the statistics on the portal? Yes, all contracts have to be submitted on the portal the month after the month of inception, in which month you will submit it as non-certain. But we still continue to chase and get the documentation, but the submission to the portal would have already been done. So that's not contract certain.
Yeah. So I think what this person is asking is, let's say the contract was received 2 months later. So I think at the point of submission, then that particular contract will be non-contract certain for leg 2.
Yes.
Contract certain.
Right. So if a risk not in SG has been ceded to a reinsurer domiciled in SG but was able to sign the slip leg 1, sorry, I missed that. Reinsurer later says 60 days informed reinsurer risk did not materialize. When everything is done, then in the month of submission to the portal, you will report this as contract certain. But of course, later, if the risk does not materialize, then the contract does not exist. So it's fine. You don't have to resubmit anything to the portal. And again, the portal statistics, you don't have to audit it as every single word and contract is accurate, but it gives a general direction of where the industry is going. But yeah, to this question, I think, well, it doesn't matter. If the risk does not materialize, contract does not exist. Should we continue, Perry, or I'm happy to? Or shall we send the answers later?
Okay, thank you so much, gentlemen. You've done fantastic, and it's so heartening to see such a flurry of questions. In fact, I can confidently say that of all the webinars we have done, this is the one that attracted the most number of questions in rapid fashion. And I must give kudos and credit to the presenter, Siu Ho, for your detailed answers and support, but Shiva, for your rapid machine-like firing
Sorry,
answers. You are faster
sorry,
than AI,
I
Shiva.
may
I
have
think,
talked too fast.
yeah, correct. I
But
think you're quicker than AI, in answering this. Fantastic. Yeah.
but
Yeah.
we can assure that we
Yeah.
will collect all the questions and send all the
Yes,
answers. Yeah.
correct. Lillian will be copying down all the questions. We have open questions 12, answered 21, more than 30 questions posed today, which shows the great interest in this topic of contract certainty, right? Okay.
Yeah.
So
No,
certainly,
very happy to answer
yeah.
even more if they come through. Yeah.
Okay. All right. On behalf of SCI and of course the speakers, thank you, Siho, thank you, Shiva, for all your effort today. We will call this webinar to an end. Rest assured that all unanswered questions will be sent to the speakers for their inputs, and we will send a copy of all the questions and answers to all attendees. Slides will be made available. A video recording of this webinar will be made available after the event as well. On behalf of SCI, thank you for your warm and great participation. Good day, and as I say, goodbye. Yeah? All right. But one important thing, when we sign out, you should receive evaluation form. It will appear on your screen. We need your input and feedback to all of you. Please help us fill in the evaluation so that we know how we can improve on all of this. Okay, thank you. Bye-bye. All right.
Thank you.
Bye-bye.
Thank you.